So today I'm going to go through this stock and see if it's time for it to be sold. This is a stock that's been performing quite well, and it's got me thinking, has this stock now got to an overvalued territory? And I thought this video would be really good, even if you're not interested in this stock and you don't own this stock, that it's very good to kind of see some thought process that I go through when considering, is it time to release that capital? And like I said, it's something that I've been looking at the last few weeks. There's two stocks in my portfolio at the moment that I'm thinking of selling, and I thought I'd go through this one and see if it's the right time to release that capital. And yeah, I mean, selling stocks is tricky. There's no concrete, oh, this stock is definitely going to go higher in the next few years, or it's going lower from here. Is it overvalued? Is it undervalued still? It's really hard to kind of realize what is going to happen to that stock in the future. So I'd kind of show you my thought process when going through that situation. And like I said, I think selling stocks in the stock market is one of the hardest things to do. I think the other hardest thing in the stock market is your mindset and patience. Those when to sell and your patience and your mindset are, in my opinion, the two hardest things in the stock market, because you have so many things playing on your mind when you think about, is it time to move away from this stock? Is it time to sell it? And also the other thing is patience. In the last 12 months, how hard has your mindset been pushed as a long-term investor? In the 12 months when you've had stocks being battered as much as they have, and you've probably seen no rewards from having your investment tied up in a lot of stocks for the last 12 months. In fact, you've probably seen your capital go down in the last 12 months. You're probably thinking, is this stock a bust? Is there something going on here? Do I give up on this investment? And even though you set out for the long term, and you got to keep remembering, I'm in this for the long term, I'm thinking where this is going in the next 3, 4, 5 years, even in that 12 months period, it does still test you, even as a long-term investor, because it is not great to see a stock investment going down for the last 12 months. So yeah, I think mindset and when to sell are two tricky things, and obviously today we'll focus on when to sell this stock. And like I said, even if you're not interested in the stock, I think the video might be helpful. So we'll get stuck onto this stock and if it's time to sell it. So the stock is Celsius, not to get confused by the crypto platform Celsius. You definitely don't want to be using that platform. In fact, it's actually going bankrupt, so you can't use it anyway. But yeah, you don't get confused with the crypto platform. I actually had someone the other day saying, oh, I'm sure you were talking about Celsius and now you can't even buy or sell on it. I was like, yeah, I was talking about Celsius, but the stock, not the crypto platform. If you look at the screenshots, you'll clearly see the energy drink, which is just unbelievable. But even when you try and make it very clear you're on about the Celsius drink, I can't believe someone thought I was talking about the crypto platform. But yeah, Celsius, the energy drink, obviously they go for a bit more of a healthier, less sugar, more vitamins, and mainly focused in the US. They've not really had much international expansion at the moment. But when you look at the stock, it's actually been performing quite well. For a growth stock, most growth stocks have been thrown in the bin and definitely not wanted, but with Celsius, they've actually been rallying up, and it is a smaller market cap at 7 billion, and that's probably why we've seen in the last few months it start rallying up, as a lot of small market caps have been doing, and as a lot of small market caps did in that kind of May-June period. It bounced up quite high from the lows, up 112%. For me, I'm up on this position. My average is around about $60, so I'm up a little bit on this position since I bought it. And it's especially been performing well since it had a partnership with Pepsi. So that's quite a serious sign that Pepsi are willing to buy a stake in, which was a 8.5% ownership, quite a big stake into Celsius. And that was a very big sign of confidence. And since that time frame, it really helped the stock rally up, and it's been holding around this $100 range. But since then, it's been struggling to beat them highs. It's been flatlining for a little bit. And you'll see here that historically, it actually does struggle to get past this $100 range. So you'll see here that it peaked around $108, $110, and now we're back at $100. And we're pushing up again, but we can't seem to break these $100 high at the moment and move further from here. Now, potentially could that be because of the valuation being a little rich? And I thought this is worth having a look at. So do I sell this stock? Do I take my gain that I have at the moment on this business? Is it a bit of a rich valuation? I do think it's worth adding in here that I actually, if any of you guys saw the video, I have actually trimmed my position a few months back. I took some profit off the table in this period here around September time one of the stocks that I have somehow managed to make profit on in this horrible year. So it is worth saying that I have done that. But the question is now, do I move away from the business a little bit more? Do I trim? Do I potentially sell all the position? Well, they did come out with recent earnings. Recent earnings are once again so impressive. They grew 98% year over year with 26 million beat on the revenue, with revenue of 188 million. Gross profit was up higher than the revenue growth as well, which shows improvement in the gross margins. And you'll also see here that there was a one-time payment due to the move to the Pepsi distribution center, which will help them probably get into more locations and also mean that their gross margins go up. However, there was some termination of contracts, so we can't really use the EPS, but on an adjusted EBITDA basis, you can see here, it was up 142%. And what has happened recently with this company is that it's actually started moving into profitability, which is great. So we've got a growth company here that's obviously performing really well, but now it's actually starting to ramp up into profitability. So you've got a company here that's growing a good revenue growth and good profit growth. Now people do scream and shout going, but it's 100 times earnings, Jacob. It is true. But the thing is, you've got to realise it's only just turned to profit. It has been focusing on expansion, and sooner rather than later, that profit is going to really start ramping up along with the revenue growth. And the big thing is not looking at what profit it's doing now. That is one of the big errors that a lot of people make, is to look at what profit the company's doing now. You can't value a growth stock off what it's doing now. You've got to value it off what the future is, because that's what it will then get valued at. And that's the $1 million question with investing. It's not valuing a stock off what it is worth now. It's about valuing what a stock's going to be worth in a few years. And that's always what people make the error with stocks in general, especially growth stocks. And an example of that is if you were valuing this stock off what it was in 2020 and not valuing where it would be in 2022. If you valued it off there, you'd be like, oh, well, no way, this is going to come a 7 billion company. But if you realised the execution, what it would come, you would have realised, okay, this stock is now going to go on to be a 20x stock from here. And that's why it's really important to realise what the future is going to be. So the future with this one is obviously to still keep up the revenue growth in America, which should drive high growth. We're expecting probably somewhere between 30, 40, 50% over the next 5 years. That's the $1 million question. One of the $1 million questions is the international expansion. Like we said earlier, it's mostly focused in the US. So there's a big difference between if Celsius stays a US company or it becomes an international company using that Pepsi partnership. So that's one question that we've got to ask here. The next thing is, how much profit is this business going to do in the next 5 years? Because at the moment, if we have a look at Celsius, it's currently doing 3% profit margin. However, when you look at the company, you'll see that they're actually a business that does 40% gross margins, which is actually pretty good. So you'll see here there's quite a bit of ramp up that they have on this product here. So the big thing that I always like to do is there a company around here that we can compare Celsius, an energy drink business, is there a company like this that we can compare Celsius to? And there is. Monster Beverage Corp. Actually one of the best performers in the S&P 500 in the last 10 years. If you look here from 2010, the stock is actually up 1,500%, which is unbelievable. So yeah. Now, it is worth pointing out that the stock is doing quite well at the moment. As you can see here, it's been on a very good run, and it probably is once again trading at maybe a little bit of a rich valuation because it's quite a safe stock at the moment, considering the stock market crash that we're going through. So probably worth pointing that one out. Now, Celsius is a bit tricky to value because obviously we don't have mass amounts of profit. But we can see here it trades at a 13 times sales ratio. So if we have a look at Monster, what does Monster currently trade at? Monster currently trades at around about a 8 times sales. So it is lower than what Celsius is. One of the big things you've got to weigh up though is obviously Monster is a very well developed company compared to Celsius that's growing at 98%. So once again, does it deserve to trade at a little bit of a higher valuation because it's, 10x the growth potentially of what Monster's doing? That's another tricky thing that you've got to weigh up there. But that kind of puts it into context that Celsius is higher than Monster. However, it does have more growth. And the thing is, can Celsius grow into the sort of business that Monster is? So we saw Celsius here currently doing 579 million in revenue. If we pop over to what Monster's doing, they're doing 6.2 billion in revenue. So there's still a bit of a gap there between the revenue growth or the revenue of Monster and Celsius. But the big important thing to look at here is the profit margins. If you look at Monster, they have profit margins, if we go all the way back to 2016, 25%, and then we keep going up, it actually touched to 26%, at the peak up to 30%, and now it's back down to around about 20%. Obviously the big thing that you'll be looking at there is obviously some of the logistic impacts that will be affecting Monster. So historically the company does around 20-25% profit margin, and then when you look at Celsius, it's around about a 3. Now when you look at Monster, they do have roughly the same gross margins as Celsius at the 50% range. Now the big thing why Monster will be a little bit higher than Celsius is because Monster obviously have reached more scale. The more cans they're sending out there, they're not scaling up as much as Celsius. They've got probably more pricing power as well. So I think Celsius can get to the point where its gross margins are on the kind of level that Monster's are. Already at the moment, for such a young company, they're holding the gross margins at 40%. So I do think Celsius could get up to the gross margins that Monster's at. So that looks very similar. Now the big question is, could Celsius get to 20-25% profit margins like Monster are? Can Celsius get to them profit margins? And I think the answer is yes. I think it might be a while till they get to the 25%, but without doubt we could see Celsius start moving up to the double-digit figures sometime soon. So that kind of shows the scale that Monster is currently, or Celsius could get to get to Monster's sort of levels. So that is potentially the projection from going from a 7.7 billion market cap company potentially up to a 51 billion market cap company. So let's look at some numbers here. So obviously it's a $100 stock. It's currently a 7 billion market cap, as you can see here. I don't think they've got any plans to probably buy some shares in the next few years. So let's put some revenue growth in. 25% in the next 5 years, 30% in the next 5 years, 35% in the next 5 years. I think that's pretty conservative, considering that it's just come off a year of 98% growth, and next year analysts have this somewhere around a 50% growth. So I think that's quite conservative there, especially on that lower end. Profit margin, let's go 15%, let's go 20%, let's go 25%. Very much like what Monster is at the moment. Can they get to 25% in the next 5 years? We'll see what happens. But I think 15% is a fair one as well. Now, I've put a multiple of 20 times earnings. Once again, I think that's quite conservative. I don't think we would see a company that's potentially growing at 25, 30%, 35% earnings with a 15, 20%, 25% profit margin. I think that's quite conservative once again. So when we look at them numbers here, the upside is actually negative 38% in the next 5 years, basically flat in the next 5 years, and up 41% in the next 5 years. So at the moment you can see here there's really a limited amount of upside in this business if it trades at a market average. However, once again, we look back at what Monster's currently trading at on a P ratio. They're currently trading at 43 times earnings. So they obviously trade at a market premium, and they obviously will have less growth than what Celsius does. So if I go back into Celsius now and put it at a 40 times earnings, similar to what Monster's currently trading at, and let's not forget Celsius will have more growth than Monster. If we look back now, we've got a 5-year upside on the lower side of 24%, 94% and 182%. So you can see here that is going to be a key difference if Celsius trades at a market premium like Monster currently is trading at, which would make sense because it's going to be a premium company. It's going to be growing fast. It's going to have good profit margins. So that is the ultimate question. Can it get to the levels of what Monster is? So overall, this kind of got me to where I was at with Celsius, which is that Celsius is currently overvalued if they do stick to just the US market. Celsius is undervalued if it goes international like Monster. So that was the ultimate answer that I found out, is that we are relying, if this comes an international business, on the level of Monster. So that's obviously a little bit of a risk because we don't know how they'll execute in international countries. So I looked and I thought, I think Celsius looks absolutely amazing. It's obviously going to dominate America. It's doing very well in America. International wise, I could see it being successful. So there's me weighing up now, what do I do with the international side of it, do I think it will be successful? And I think it will. I think it could be on the levels of a Monster Beverage. However, there's risk there, because if it doesn't and you fall back on the US side of it, it's probably looking quite overvalued. So when I looked at these numbers here, I thought that when I looked at Celsius, it's probably worth me holding some of this stock. And if they do go on to dominate the international part of the world in the energy market, I'm probably going to make a good amount of money on this, and I'll make an even better return. So I want to keep some here because I've got a really good average, and if they go on to dominate, which is going to be massively helped now because of the Pepsi deal, I should do quite well, and I should get a really good return, and this stock should beat the market in the next 5 years. However, worst case scenario, is it a good idea right now at these valuations to take some profit off the table? Probably yes. Now, thinking back, I did trim some of my position. So I've already took some profit off the table. This is a massive error that a few people made in the last bull run. So many people got caught up in the bull run through 2020, 2021. They just kind of sat back and went, yeah, I'm a long-term investor, I'm not going to take any profit off the table, but you never know what's around the corner. And all them people that took no profit off the table in that bull run are stood here now going, I've had my money tied up in all these stocks for the last 2-3 years and I've made nothing from it. Whereas everyone that kind of took some profit off the table is like, yeah, it's a bit of a stinker, that we're in a bear market right now, but we made a lot of good money in the last bull run, so it's okay at the moment. I can put up with it. And that's obviously something key to kind of remember. Don't get caught in what it'll be in the future. It's always good to kind of have a bit of reality check. Is it time to take some cash off the table? So that considered, I think that this obviously ultimately shows that it is more to the overvalued side with potential further down the line, but more than anything, it probably would be wise to take some off the table, which I have done. So the ultimate question that I personally am left with is that I'm going to hold some in case it comes onto the line of Monster Energy, but is it worth taking a little bit more off the table because of the risks that they have to execute on to get to them sort of levels? And that's where I was left with Celsius, and that's where I am potentially thinking about or the move that I make with this company next. So yeah, I personally, I'm not fully decided, but I thought it'd be good to kind of show my workings out and what my thought process is, and is ultimately left me with the choice of now, do I take a little bit more cash off the table or carry on holding? But obviously, if I hadn't taken any cash on the table, I would have done after making or doing this research and making this video anyway. So yeah, hopefully you enjoyed the video anyway, guys, and if you could hit that like button, that'd be absolutely amazing. Something a little bit different today, and yeah, I'll catch you in a bit.